Use the following information to prepare the July cash budget for ACO Company. It should show expected cash receipts and cash disbursements for the month and cash balance expected on July 31st. So this is a cash budget for the month of July. We got cash coming in up here, cash going out down here, and a cash balance at the bottom. So, beginning cash balance on July 1st, $44,000. Plug that in first. Next, we have cash receipts from sales, and it says here 15% is collected in the month of sale, 50% in the next month, and 35% in the second month after sale. And uncollectible accounts are negligible and can be ignored. Sales amounts are, now remember, all we care about is what's supposed to be coming in July. What's going to come in July of these sales, that is cash collected. So sales amounts are May actual $2 million, June actual $1 million, July budgeted $1,200,000. So cash receipts in May, of this $2 million worth of May sales, it says we collect of the May sales, we collect, let's see, 15% is collected in the month of sale, which would be May, 50% in the next month, which would be June, and 35% in the second month, which is July. So all we care about is what are we going to collect in July of May's sales, and that'll be 35% of them. So $700,000. June. In June, we're going to sell $1 million worth of items, and it says you collect 15% in the month of sale, which would be 15% of June's sales will be collected in June, 50% in the second month, which is July. So of June's $1 million worth of sales, we're going to collect 50% of those in the month of July, which is all we care about is July because it's a July budget. So that's $500,000. And then in July, the July sales, which are $1,200,000, all we're going to collect in the month of July will be 15% of those, which would be $180,000. Total amount of collections from sales will be $1,380,000, which we will put in under the cash receipts part B. Add the two together, that is, add the beginning balance of cash plus the cash receipts, you get total cash available of $1,424,000. And next we are going to go down to cash disbursements. Cash disbursements will have payments for purchases. Payments for purchases says 80% of what you buy, let's see, 80% in the month of purchase, that is, you're going to pay 80% of it in the month of purchase and 20% the month following. So again, all we care about is how much of these purchases are we going to make payments for in the month of July. So we have June purchases of $440,000, and it says you pay 80% of that in the month of June and 20% that a month after, which is July. So of these purchases we're making, only 20% of them will be something that's going to require cash in July, which is $88,000. For July purchases of $780,000, we're going to pay 80% of those in the same month, or $624,000, and so that's what's going to be these two together. What we're going to have as far as payments for purchases in July total, which would be $712,000. So we'll put that next. Then we go to part D. Budgeted cash disbursements for salaries in July, $260,000. That's pretty well straightforward. Then budget depreciation expense for July is $10,000. Depreciation is a non-cash item. It's not going to go on this budget because it's not going to be any cash involved in it, so we'll skip that. Next, we go to F, other cash expenses for July, $230,000. That's F, 230. Accrued income taxes for July, $50,000. That's taxes, which would be Part G, $50,000. And then we have bank loan interest due in July, $5,000. That's interest expense, $5,000. Add up all these disbursements, you should come up with a total of $1,257,000. You'll subtract those from the cash receipts, or cash available, I should say, $1,424,000 to get an ending cash balance of $167,000, and it's to the plus side.